Suppose, let us say that Mohit purchases a car of rupees 10 lakhs. You also have 45 kilometers in the line. So, suppose he purchases a car of 10 lakh. After 1 year, will that car's value be 10 lakhs? No. Will it be more? Will it be less? Yes. How much? For example,
10%.
7 lakhs, 9 lakhs, 8 lakhs, depending on the usage. Suppose I purchase a car of 10 lakhs. After 1 year, will its value go down? Yes. No. It is my car. It will go down. So, whosoever's asset it is, whether it is mine or Mohit, after 1 year the value will go down. That decrease in the value of asset is called depreciation. Did you understand this? Yes. Now we are going to study two main methods of depreciation. So meaning except I make you write later on, understand the concept. Today only we are going to do concepts. Practical questions we shall be starting tomorrow, so just understand the things properly. There are two main methods of depreciation we are going to understand. So meaning of depreciation is very simple, decrease in the value of an asset. Now there are two main methods of providing depreciation. Yes, silence. One is straight line method. Yes, go first. Straight line method, SLM, and the other one is reducing balance method, RBM. I want complete silence, no whispering, murmuring in between. One is straight line method, the other is reducing balance method, SLM and RBM. Straight line method is also called equal installment method. It is also called fixed installment method. I'll tell you all that later on. Okay? But if these names comes in exams, don't consider it out of syllabus. It is the same method. So straight line method, equal installment method, fixed installment method. Reducing balance method is also called diminishing balance method, DBM, or written down value method, WDV method. All the names are of reducing balance method. I'll write it later on. Okay. Now what is the main concept of these two methods? In straight line method, depreciation is provided on cost price every year. Okay, depreciation is provided on cost price every year. In reducing balance method, depreciation is provided on book value, or you call it as written down value every year, and that's why it is also called written down value method. Okay, here it is provided on cost price, and here depreciation is provided on book value or written down value every year. Now here what happens is, depreciation amount, because you provided on cost price, it remains same every year. Because you provide the depreciation amount on cost price every year, the amount is going to remain same. Okay, and that's why it is called straight line method also. Straight line, how the line remains? Same. Means every year the line remains same. It doesn't go up, it doesn't go down. So it's called straight line method, and the other names which I told you, equal installment method, because the depreciation amount remains same. Fixed installment method, because again fixed means the amount remains same, it does not change. Whereas here the depreciation amount keeps on reducing. Particularly there are two types of changes, increase or decrease, but here it keeps on reducing every year. Because you counted on the book value, which will keep on decreasing every year. Okay, that balance or book value is decreasing every year. Depreciation is counted on the reducing balance every year. That's why it's called reducing balance method. So here the depreciation amount remains same every year. Here the depreciation amount keeps on reducing every year. I'll write one example to understand it, and then one more difference I'll explain it to you. Okay? Suppose C means cost price. Suppose the cost price of asset is 100. The rate of depreciation is 10%. Okay, in both the examples I take the same. Cost price is 100, rate is 10%. How do you provide the depreciation is? First year, the cost price is 100. At the end of the year, you will provide depreciation. 10% we will provide on? So, 100 into 10%. 100 into 10% will be 10 itself. Means what will be the book value? This is called, 90 is called book value. Or you can also call it as written down value. Written WRITTEN. Okay, written down value. This will be the book value or written down value at the end of first year. Now second year. Again when you provide depreciation, we are doing right now by which method? So every year you are going to count on? And again you count hundreds 10% only, which is again going to be 10 rupees. Therefore the amount remains same every year, 10 rupees. So now what will be the book value? Book value or written down value will be 80. One more example of one more year. Third year. What will be the depreciation? Third year also it will be 100. Cost price 10%, so it is going to remain. So every year 10, 10, 10 depreciation. Every year the amount remains same. Book value 70. Yes, silence. And so on, you'll keep on providing it. Okay? Now, if you do it by reducing balance method, then first year the cost price is 100 minus depreciation 100's 10%, that is 10. Book value or written down value is 90. Now in the second year, here we count depreciation on book value. So now will you count on 100 or 90? 90. Now you count 90's 10%, that is 90. Here second year also you count 100's 10% every year on cost price. But here second year you don't count on 100, you count it on book value or written down value. So second year you count 90's 10%, 9. And so 81 would be the book value or written down value in the end of second year. And that's why I said the depreciation amount keeps on reducing every year. Here it was 10, now it is 9. So if I do it for one more year, third year, then now how will we count depreciation in the third year in reducing balance method? 81's 10%, 8.1, 72.9 will be its book value or written down value, and so on. Did you understand this concept, everyone? Anyone having any confusion with the concept of the two methods? Now tell me, after 10 years what will happen? 0. 70. Next year again 10, so 60, 50, 40, 30, 20, 10, 0. So after 10 years, at the end of 10th year, the value will become 0. Okay. Here, will it become 0? at the end of 10th year? No. It will not become 0. The reason is, even if 1 rupee remains, then once 10% is 0.1, then book value 0.9, then next year 0.9's 10% 0.09. It will never become exactly, it will go towards 0, but it will never become exactly 0. Here at one point of time it will become 0. So that is the third difference. The third difference is value at the end of useful life. Value at the end of useful life. In straight line method it becomes 0 or scrap value. That concept I'll explain you later on when I discuss one of the formulas. Either the value in straight line method will get reduced to 0 or scrap value at the end of its useful life. Here it will not get reduced to 0. It may get reduced to scrap value, but it will never get reduced to 0. Did everyone of you understand this? So any confusion with the basic concept of two different methods? All are clear with it? So, first, meaning of depreciation. Meaning is one line only. Depreciation means decrease in the value of an asset, comma, wear and tear, usage, comma, wear and tear, W-E-A-R-T-E-A-R, wear and tear, comma, passage of time. Also with the passage of time, even if you don't use it, the asset has become old, so its value has gone down. Okay, so passage of time, comma, obsolescence. You should have heard this word in economics, or you? Obsolete. Okay, outdated. Obsolescence means outdated. As and when the things become outdated. For example, this mobile phone, though purchased recently 1.5 years ago, 2 years ago only, but its value has gone down more than half, because after iPhone 6, then iPhone 7, then 8, then 10, iPhone X, that is 10. So because of the advancement of technology, the old technology becomes old, and you find that in mobile phones the most. The old technology immediately becomes outdated. So because of that also the value of asset goes, etc. Okay, these many reasons are sufficient to understand why the value of asset would go down. Is everyone clear with it? Now write down this complete. Methods of providing depreciation. Also write this example so that whenever you revise, you are able to understand the basic difference between the two. Okay? 4 points you'll write: meaning, depreciation, example, and value at the end of useful life. Initially, we will be starting with the examples of straight line method, which I'll explain you in detail entirely. Then once we come to reducing balance method, I'll be doing only workings on the board, and accounting in both the methods is going to remain same. So you will be trying the accounting part on your own. Raise your hand who is writing it still. So anyone having any confusion with any of the two methods? Accounting entries you'll write along with me. They are very, very simple. Normal rules of journal entries are to be followed. Okay. Now be attentive. First entry we have to understand: for purchase of an asset. Write down for. Silence. For purchase of an asset. Now this entry we have been passing in journal chapter also. Asset comes in, debit what comes in. So asset account debit. Now normally the purchase price of asset is very huge. We don't pay it in cash. Okay, if you purchase a machine of 3 lakhs, 2 lakhs, you don't pay such amounts in cash. You always pay by check. So bank is the giver, credit the giver to bank account. Okay, bank is the giver, credit the giver to bank account, but some expenses we pay in cash, like you have been doing Purchase machine of 50,000, paid installation charges of 2,000, carriage amount of 500. So such small expenses, wages are paid. They are to be generally paid in cash. So cash goes out, credit what goes out to cash account. Bank account will be with the purchase price. Cash account will be with the expenses. Bank account will be with the amount of purchase price, cash will be with the amount of expenses. Purchase price plus expenses will be the cost of asset. Okay, purchase price plus expenses will be the total cost of asset. Did you understand this? So first entry for purchase of an asset, asset account debit with the total cost, to bank account with purchase price, to cash account with expenses. Any doubts in this? Second, for providing depreciation at the end of the year, will always provide the depreciation at the end of the year or at the time of selling it. Okay, either you provide the depreciation at the end of the year or at the time of selling it. Both we have seen in final accounts. In final accounts question 13, I had done the working where we calculated depreciation on 1/10/14 when we were selling it. Otherwise, we always count depreciation at the end of the year 31st March. So, we have seen this entry in final accounts. What entry? Final accounts, we have seen the adjustment entry. Depreciation account debit to assets. Okay, depreciation is an expense. Debit all expenses and losses. So, depreciation account debit. And the value of asset decreases. Asset is a debit balance. To decrease its value, we reverse and credit. So that we have already studied in final accounts. Did you understand this? This entry will be passed either at the end of the year or at the time of sale of assets. Okay. Third, because depreciation is an expense, nominal account, will it be closed and transferred to trading account or profit and loss account? Profit and loss account. So for transferring depreciation account to profit and loss account. Now closing entry is consent. Depreciation just now we debited. So to close it, what will we do? Reverse and credit the depreciation. And which account you will debit? Profit and loss. You transfer it to profit and loss. So profit and loss account you will debit to depreciation account. Okay. So depreciation is a nominal account. It will be closed and transferred to profit and loss account. Just now we have debited it. To close it, you will reverse and credit depreciation account. And because we transfer it to profit and loss account, so profit and loss account. Any confusions with this? Now, when you sell the assets, this was purchase of asset. Now, when you sell the asset for sale of asset, by the way, these two entries will be repeated every year because every year at the end you will provide depreciation. So every year you repeat this entry until the asset is sold. Until the asset is there in the business, every year you repeat these two entries at the end. Did everyone understand this? Now when you sell the assets, so now we receive the money, and again as at the time of purchase we make the payment by check. If we are selling it and it's a big amount, we would receive it by check. So bank is the receiver, debit the receiver, bank account, debit, asset goes out, credit what goes out to asset account. Did you understand this? Everyone has written up till here? So when you purchase the asset, asset account debit to bank, and now reverse. When you sell the asset, bank account debit to asset. In case if we receive the money in cash, then cash account debit to asset. Did you understand this? Now whenever you sell it, two things are possible. Either the asset will be sold at profit or it will be sold at loss. For profit or loss on sale of asset. Okay, either the asset will be sold at profit or at loss. If it is sold at profit, then asset account will have debit balance or credit balance. If it is sold at profit, will asset account, profit means will it have debit balance or credit? Credit balance. Because selling price means credit will be more than the cost price, that is debit. Credit side total will be more means it's a credit balance. To close the asset account which is having a credit balance, you'll reverse and debit. And you'll transfer the profit to profit and loss account. Once again, if the asset is sold at profit, then asset will have which balance? Credit balance, because selling price will be more than the book value, credit will be more than debit, so credit balance. And to close that credit balance, we reverse and debit and transfer it to profit and loss account. Same way, if it is sold at loss, then asset account will have which balance? Debit balance. So to close it, you will reverse and credit the asset account, and what you will debit is profit and loss account. Did you all understand this? So if the asset is sold at profit, asset account will have credit balance. So to close it, you will reverse and debit asset account and you will transfer it to profit and loss account. And if the asset is sold at loss, then asset account will have debit balance. So to close it, you will reverse and credit asset account, and profit and loss account you will debit. Is everyone clear with this?
Yes, sir.
Now, how we will make the ledger account from this? Normally, we have to make the ledger account directly from the journal only. But here I am explaining you the ledger account in the beginning itself, because if journal is not asked and ledger is directly asked, then I will give you one shortcut method to make it without the help of journal. Okay, we can make the ledger without the help of journal. So how to make that, I'll explain you over here. Only particularly machinery account, the other ones we will make with the help of journal only, but there is a shortcut method of making machinery account without the help of journal. So understand this first, then you can write it. Date, particulars, JFM. See here. First entry for purchase of an asset. What is the journal entry? Asset account debit to bank to cash. Now asset account debit means in asset account we will write on debit side both the opposite accounts to bank account with the purchase price and to cash account with the amount of expenses. Did you understand this? Second entry, depreciation to asset. To asset means where will it come in asset account? Credit side by depreciation account with the amount of depreciation. Third entry will not have any effect on asset. P&L to depreciation, so it does not affect asset account. Fourth entry, bank to asset. Again, to asset means we'll write on credit side by bank account. This is with the selling price, sale of machine or asset. In fact, it can be any asset, it could be furniture also. So let us mention as ledger of asset only. Maximum questions you'll have machinery, but otherwise can be furniture, vehicles, any other asset. Okay. Then fourth entry is done. Bank to asset, so asset account credit side by bank. Fifth entry, if there is profit, then asset account debit to profit and loss. Now asset account debit means in asset account we'll write on debit side to profit and loss account. In bracket, this will be with the amount of profit. And in case if there is a loss, then profit and loss to asset. To asset means in asset it will come on credit side by profit and loss account. In bracket, loss. And generally assets would have debit balance. So debit side total will always be more. And whatever amount remains on credit side will be the closing balance by balance carried. So this is how we get the ledger account from the journal entry. We'll make it for every year this way. Okay. Now what shortcut you can remember? Without the journal entry, how we can pass it? All of you repeat. PP. PP. One more time. PP. One more time. PP. Purchase and profit. Once again, PP, purchase and profit.
PP, purchase and profit.
Debit side, everything else credit side.
Debit side, everything.
Purchase and profit comes on debit side, everything else comes on credit side. Purchase we have written on the debit side, and at the time of purchase only you'll have expenses. Profit we have written on the debit side, everything else will come on credit side. So if journal is not asked and directly the ledger is asked, then also it can be done directly with the help of workings. Journal is not needed. What you remember is PP, purchase and profit will be recorded on debit side. Everything else will be recorded on credit side. Did everyone understand this? So is everyone clear with the shortcut method of making this asset account? What things will come on debit side? Which PP? Purchase and profit. Everything else credit side. Now, in the same manner, if they ask you to make the ledger of depreciation, no shortcut is required to remember depreciation's ledger account because the account itself is very short. Only two things are there, so you can directly remember is no shortcut is required. So if ledger of depreciation is asked, small account, make 3 lines account only. Ledger of depreciation. Now, how to make this depreciation's ledger account? Understand, it is very simple. From second and third entry, we will be making it. We'll always provide depreciation at the end of the year, so date will always be 31st March, except when you sell it. Sell it, then it can come in between the year. So as per the second entry, depreciation account debit means in depreciation account you will write on debit side. Generally the date would be 31st March. Name of opposite account to asset account. Okay, name of opposite account to asset account. Any confusion in this? And third entry, it is closed and transferred to profit and loss account. P&L to depreciation. To depreciation means in depreciation on credit side, same date 31st March, opposite account by profit and loss account. It will never have any closing balance because it is closed and transferred to profit and loss account. It will always be a squared up account. Okay, it will never have any closing balance. So very short and simple, no shortcut is required to remember it. And this you have to keep on repeating every year. To asset by P. To asset by P. You know, keep on repeating this every year. Did you understand this? To asset by P. So it's a very small account. Any confusion in this? And the last topic in the basic concept, this also we have already done. Because just now we finished the chapter of final accounts. So how would you give the effect of depreciation in final accounts? How would you give the effect of depreciation in final accounts? Means in profit and loss account and balance sheet. Trading account it does not come. So it will come in profit and loss account and balance sheet. And both these effects we have seen when we have made the final accounts. Profit and loss account has columns of particulars and amount. And balance sheet has liabilities and assets. Maintain silence. Understand it, then you can keep writing it. We have seen these effects in file accounts. In profit and loss account, it will come on debit side to depreciation because it is an expense. Particularly, we used to show it under which expense? Other expenses and losses. And you'll minus from assets. So under fixed asset, you'll subtract depreciation from fixed assets. This effects also we have already seen in final accounts. So in your question, either they'll ask you journal or they will ask you ledger. Journal and ledger both can also be asked, or they'll ask you effective final accounts. 3 questions are possible in this chapter. Make journal entries or make ledger accounts or give effective final accounts. All the 3 can also be asked. Any 2 can also be asked. Did everyone understand this? Any confusions? So, first method, straight line method, will start tomorrow with practical questions. Everyone is clear with that? Tomorrow test is in Abhishek sir's lecture.